Go Mechanic is in the midst of restructuring now. It is laying off 70% of its workforce and is reportedly tapping Cars24 and Spinny for a distressed sale. Big lapses have emerged in its financial reporting. The major investors of the car service aggregator have said in a statement that they were recently informed of serious inaccuracies in the company's financial reporting. A statement issued jointly by major investors of Go Mechanic went on to say that we are distressed by the fact that the founders knowingly misstated facts, including but not limited to the inflation of revenue which the founders have acknowledged. All of this was kept from the investors. Go Mechanic's co-founder Amit Bhasin has also admitted to the irregularities. 60 of the total 1,000 or more service centers were found to have possibly violated accounting norms to overstate revenue and divert funds by auditing firm EY, according to a Bloomberg report. Go Mechanic is not the only startup backed by Sequoia to come under the spotlight for corporate governance issues and financial scandals. Prior to this, other portfolio startups such as Bharatpe, Trell, and Zilingo were also in the dock for allegations ranging from financial and accounting irregularities to lax implementation of norms. In April 2022, risk and financial advisory firm Kroll had found financial wrongdoings at Zilingo during a due diligence process for a new funding round. The Singapore-based fashion startup's board first suspended and later fired its CEO Ankiti Bose for financial irregularities. A month before that, an EY review alleging serious financial irregularities stalled lifestyle social commerce platform Trell's over $100 million funding round and ultimately led the company to lay off over 300 of its 700 employees. And in January last year, risk advisory firm Alvarez & Marsal flagged indications of financial fraud consisting of recruitment irregularities and non-existent vendor payments at fintech unicorn Bharatpe. The firm subsequently fired 15 employees, including co-founder Ashneer Grover's wife Madhuri Jain. In December, Bharatpe filed a civil lawsuit as well as a criminal complaint against Grover and his family in the Delhi High Court, seeking 88.67 crore rupees in damages. On Wednesday, the fintech firm announced the appointment of 3 top executives in compliance and corporate governance roles. The Bharatpe imbroglio is similar to the one faced by Housing.com in 2015 and the unceremonious exit of its co-founder Rahul Yadav, who later described his behavior as immature. The company rose to prominence just before the first massive waves of foreign VC capital entered India's startup landscape. So now, the regional arm of Sequoia Capital in South and Southeast Asia is weighing special audits of several investments in the region. The venture capital firm will work with Ernst & Young on some of these audits and will increase budget allocations to help investee companies put governance guardrails in place. The cases at Bharatpe and Housing.com in 2015 paint a picture of a startup culture obsessed with superstar entrepreneurs at the expense of developing sustainable governance structures. Another startup is also attracting a lot of attention due to similar reasons. EdTech major Byju's, which is India's most valuable startup with a valuation of $22 billion, missed the deadline to file its audited results by 17 months. Its auditor, Deloitte, had also refused to sign off on the company's financials, citing irregularities in their revenue filing. So are these cases then symptomatic of a more extensive rot in the entire startup ecosystem, diverse as it is?
It to be generalized to say that, there's a governance issue across all startups, I think that would be a very wide brush to paint. I think the issues that have come out are not so much compliance issues. They are systemic, financial control issues. Yes, compliances are lax, but it's not the intention of everybody to have financial irregularities or lack of financial controls. Most of the startups do actually run a very tight ship.
Parth Gandhi, founder and CIO at Bombay Capital Management, also believes this is not a sector-wide phenomenon.
I do not believe there is a widespread issue with governance across all startups in India. Of the dollars, the billions of dollars deployed into the Indian market, how many of these governance issues are actually there? That issues exist, but is it 10% of dollar deployed? Is it 10 basis points? I'd venture and guess it's closer to 10 basis points. Is it good? No. Should it be improved? Yes. But let's keep in mind as to the order of magnitude where this is happening. And it's pretty low.
However, while the issue might be resolved in a case-to-case basis, do these examples point towards wider industry practices which VCs must exercise as precautionary measures?
See, there is a significant difference between diligence and audit. Diligence is on the basis of documents prepared and given to you by the company. You are not questioning the creation of the documents themselves. When investors come in, they do a diligence on the basis of which they form a certain view, whether something is right, something is wrong, something could have been done better, etc. They are not actually conducting an audit. They are not looking at all the backup documents for every one of those entries which have been made. So, see, first of all, you invested in the company because you believed in the promoter. So, open dialogue, better participation at the board, and last but not the least, ensure proper financial control, however it might be.
Having consistent, constant contact with the portfolio company is important for all of us. Whether that be through MIS, whether that be through touching, be actively involved in the board, all of that is true. Again, am I saying it's not happening? That's not true. I think it is happening, but it can be improved. So at the beginning, more diligence, followed up by post-investment, consistent and constant contact, and through board sessions, having a strong ability to identify when issues are coming up and jump in and correct them early.
Industry experts are not worried that Sequoia's misfortune with its recent investments is a signal for the larger Indian startup sector to tighten its belt. They do, however, believe that certain preliminary measures need to be taken by the VCs while dealing with and keeping in account of the promoter companies.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.